I'm about to show you the 3 Canadian dividend stocks that I personally hold in my tax-free savings account. And in this video, I'm going to walk you through the exact reasons why I hold each one. So without wasting any time, let's get into it. And a quick disclaimer before we dive in, just because I hold these companies doesn't mean you should. I'm not a financial advisor and this is not an advice. I'm just sharing my personal portfolio and my reasoning why. And I've been holding these 3 companies from last 4 years. After the COVID, I remember I buying these stocks and end up never selling them, and they still pay me good dividend and they have a good growth as well. So you need to do your own research and decide what makes sense for your situation. And that being said, I genuinely believe these companies. Now the first stock in the list is Fortis. Ticker symbol is FTS, is traded on Toronto Stock Exchange. And I'm going to be completely honest with you. I hold Fortis because I want to sleep well at night. Let me explain what I mean with that. So the Fortis is a regulated utility company. We pay our Fortis natural gas bill, our electricity bill. They provide electricity and natural gas to the customer across Canada, and not just in Canada, but in US and in Caribbean. So here's the thing about utilities. And here's why I, at the first place, started investing in utility stock like Fortis. People pay their bill. If you go listen to the Warren Buffett, he will say, invest in the companies that you know is recession proof. That if the market crash, if there is something bad with the economy, people still gonna end up pay to that company. So people pay their bill, recession, no recession, bull market, bear market, doesn't matter. So the light stays on, the heat stays on, Fortis will get paid. And few other reasons why I hold this company is that first is dividend king, 50 consecutive years of dividend increase. So that's a business model that works. Reason number 2 is predictable cash flow. And I know what I'm getting. There is no surprise with Fortis. Reason number 3 is that I can hold this forever. I don't have to worry about disruption. I don't have to worry about competition. Utilities are boring, and that's exactly why they work. So the yield, I remember when I bought the stocks, it was trading at $53 per share. Right now it's about at $77, I think. That time the yield was 6%. Now because of the growth, it's around 3 to 4%. And it's not the highest, but it's reliable. It grows and I can reinvest those dividends without paying a single dollar in tax. And also during this time, when the blue chip stocks like Microsoft, it's the biggest holding in my portfolio, it's down. So Fortis is acting as an anchor in my portfolio. When everything is volatile, Fortis just keeps doing its things. So it's just a foundation of my tax-free savings account, and I have zero plans to sell it. Now let's jump into the second stock. So the stock number 2 that I personally hold is Canadian National Resources. Ticker symbol is CNQ. I hold Canadian National because I believe in their cash flow story. So let me explain what. So Canadian National Resources is one of the largest oil and gas producers in Canada. They don't just move oil like companies like Enbridge, they move oil. They just pull it out from the ground. So when oil prices go up, they print money. When oil prices drop, they feel it and the prices drop. So this is cyclic business, and I know, and I knew before investing in that, that's going to happen. So why do I hold this knowing it's cyclic? Reason number 1 is the free cash flow is massive. Trust me or not. When oil prices are even little bit like moderately high, Canadian Natural generates billions in free cash flow. And they return a lot to their shareholders through dividends and share buyback. Reason number 2 is dividend growth. And over the last few years, they have been aggressively raising their dividend. So we're talking about double digits, 10 to 15% increase. Reason number 3, share buyback. So I'm from accounting background. When company buy back their shares, it show their strong reputation. So they're shrinking the shares count, and this means my ownership percentage is growing over time. And the yield is typically around 4 to 5%, sometimes even 6%, even higher. So in a tax-free savings account, that income is completely tax-free. Now here's what I want to be clear about. The stock is volatile. I have seen a drop of 15 to 20% in a matter of weeks when oil prices sell off. But the thing is, I'm not trading this. I'm holding this for the income and the long-term cash flow. If you panic when your portfolio dips, this stock is not for you. But if you understand the cycle and you're willing to hold through it, I think Canadian Natural is one of the best income generator in Toronto Stock Exchange. Now, the third stock in the list is Canadian National Railway. So this is the first stock that I ever bought. And the reason I hold CN Railway is I think it's one of the best business in Canada. Let me tell you why. So CN Railway, they move goods across North America. So we talk about grains, cars, oil, consumer products. Even I used to live in Esterhazy, Saskatchewan, the small town. It was full of CN railways. There was like 3 tracks going through our town, all over Saskatchewan, and even in BC, I see CN railway going all over. So CN is probably involved in many things. This is infrastructure, and this is the backbone of Canada and the economy. So why do I hold this in my tax-free savings account? I know their dividend is not massive. It's not like 4 or 5%. It's between 1.5% to 2% always. The reason number one is economy. You can't just go build competing railway network. So the barrier to entry in this business, it's not like a Shopify or online business that you can go and competition is really high. Competition is really low in this senior railway business and the barrier to entry is high. So it has a structural advantage that's almost impossible to replicate. Reason number 2 is consistent dividend growth. So CN has a long track record of raising its dividend year after year. So it's not a huge jump but steady, predictable growth. Reason number 3 is capital appreciation. So this is not just a dividend stock like CNQ or Fortis, although they are pretty good, they pay pretty good dividend. Over the last 10 years or 20 years, CN share prices has grown significantly. The yield is lower, usually around 2%, but I'm not holding this for a yield. I'm holding it for the total return. Now let's think about as an investor. So as long as Canada and US are producing and consuming goods, someone needs to move them, right? And CN is the most efficient way to do it. I believe this company will still be relevant in next 20, 30 years, maybe longer. So that's why I hold it. And honestly, I have no intention of selling it. So the question is why only these 3 stocks? Because I look for balance in my portfolio. I got Fortis for stability. I got Canadian Natural for high cash flow and yield. And I got CN Railway for long-term growth. So let me give you some rough idea about what this looks like. Let's say I have these 3 equally weighted in my tax-free savings account. So my blended yield is probably around 3.5%. That means for every $10,000 I have invested, I am generating roughly $350 per year in tax-free dividends. Now here's what I do with those dividends. I reinvest them every single dollar because that's where the magic happens. In reinvesting your income, that compounding becomes serious in next 20 to 30 years. And I need to say one more thing. Just because I hold these stocks doesn't mean you should. I'm not your financial advisor. I don't know your goals. I don't know your risk tolerance. Stocks go down, dividends can be cut. A tax-free savings account protects you from taxes. It does not protect you from the losses. So my job is to share what I'm doing and why I'm doing it. Your job is to decide if it makes sense for you. If you found this helpful, hit the like button, subscribe if you want more Canadian investing content where I actually share what I'm doing with my own money. Thanks for watching and I'll see you in the next one.